Recording. All right, what's up, guys? So let's first start off by doing like a little recap. We'll do like a little recap on exactly what we went over yesterday. So let's start from the top. Obviously, these are our closest ones taking a trade. Our last two or three are the last ones to take the trade, right? So first up, we have NZDJPY. As you can tell, we are still above the retesting weekly area of interest, retesting 85,500, retesting daily area of interest and daily EMA. So as of right now, as what you guys can see, what out of, because then all we're doing right now is just reading the market. Out of what has happened here, what has changed in here? What has currently changed from what has happened here? Like, let's say you were to take this trade right now, what looks different? If anything looks different. Okay, there you go. There you go. So there you go. Awesome. We are now under 85,500. So we're no longer retesting it because now this is, since we are under this level, you can see the moment we break under, we can clearly retest and then sell. The moment we break under, we can retest and then sell. Break under, retest and sell. Break under, retest and sell, retest and sell, so on and so forth, right? So right now we are under that level. So we are currently not retesting round psychological level, and we are not retesting daily area of interest because we have obviously broken through that. All we have right now is we're still rejecting the daily EMA, which is good, right? This is where we'll go down to the 4 hour and look at the importance of just waiting for a simple shift of structure on the 4 hour, how this could have saved this trade. As you guys can see, we have low, lower high, low, lower high, lower low. We didn't body close above this. And as you can see, we had another push to the downside. So just by simply waiting for that shift of structure, this saved us this drawdown. Because somebody said, oh, you have a bullish engulfing here, entry here, stop loss under, boom, you would have gotten stopped out. We needed to this to break above, then have the higher low, and then here we wait for an entry signal, right? So as of right now, we're still nowhere near that. We're still getting to learn how to properly read the market and all that stuff. So as of right now, this trade, I'm still very interested in it. I'm just going to wait for the same exact thing. We need to buy or sell at a daily or weekly area of interest. As of right now, we are under that. So I need to wait for the break above. So hopefully tomorrow we get a bullish engulfing. And then after tomorrow's bullish engulfing, we can enter on the following day's retest of the wick. Very similar to this, as you can see, daily bullish engulfing above. Then we have the wick retest, and then it's gone. It's literally exactly what we're waiting for right here. And at the same time, this bullish engulfing, when we go down to the 4 hour, it'll then be the break of the 4 hour structure. Then we'll go bullish. Then hopefully this EMA then gets used as support, and then it rides to the upside, right? You guys are seeing how we're kind of painting the picture. We're kind of like building it out, right? Just things that I'm literally telling the market, do it. So once the market does it, you're going to be a lot confident on taking the trade. And then the moment you take a trade, you could just literally set and forget. You don't have to be watching the markets. You don't have to be, you know, if you're in profit or in drawdown, like you're confident in the trade. And then if the trade does do all of that and then it stops you out, you're like, well, like I could have not asked for more. You get me? Like everything that I asked was there. That's why you risk a certain percentage of the trade. And then if it hits your stop loss, you move on, right? Like there's never going to be 100% like win rate. It's just not going to happen. That's why we still use risk management, even though we tell the market to do all of this. Like these are all the things you need to be profitable. Like it's not easy, bro. Like this is not going to just like come, right? So as of right now, that's what we're waiting on. NZDJPY looks good. GJ, so this is very good. This is very, very good. As you can see, GJ on the daily, look at the difference between this one and then this one. This is why I told you guys both of these pairs are basically the same because of the JPY, but one of the two are going to look cleaner and get ready first. As you can tell, obviously this, we are rejecting not only round psychological area of interest, but we've rejected the daily EMA. Right? When we go down to the 4 hour, you can see that the 4 hour is technically still bearish, but we could come back, create this higher low structure, retesting the neckline of this double bottom. And then once it does that, when you go out to the daily, you'll notice that it's literally just a wick retesting the daily EMA. You go down to the 4 hour, you see how that wick is going to perfectly come into this area. So I'm literally actively looking for trades on this pair as of now. So all I need is obviously on the lower time frames. Did you notice the lower time frames went from bearish as well, and then we went higher high? It's gonna have the higher low. Now it's a matter, once it has the higher low, can we get an entry here and then take it long, right? So right now we're not focused on that. Like this is literally a perfect trade on exactly like this is like a perfect trade, right? But we're gonna come back to this on week 3 or 4, and it's gonna make a lot more sense right now. But I just want to get you guys to understand how, where is this? Oh shit. Let me see. I don't even know where it is. Okay, yeah, right here. All right, so let's keep building it out. As of right now, it's the same exact thing, right? We're still, all of these time frames are bearish, weekly retesting, rejection, rejection, rejection. So now this is where we would go down to the 4 hour time frame, and this is where we'll start our new confluences. So now we'll go on number 6. I'll be like waiting for retest of 4 hour double bottom, right? It's I think it's in the book. I think it's in the Candlestick Bible book. Whenever there's a double top, it's not a confirmed double top until we come back and retest the neckline and then head to the downside. Same thing, vice versa. It's not a confirmed double bottom. It doesn't come back and then retest the neckline, right? For us, it's just more like a higher low. We can't buy here because it's a higher high structure. So we would need a higher low. You guys see that, right? You guys understand why we're waiting for that? It's the same exact thing as the other time frames, even though the 4 hour is still technically bearish because this would be the lower high, lower low. But this is like the market structure within here. It's a high. So this would be the lower high. We'll put lower high, and then we'll put lower low over here, right? Whatever. Anything that happens in between here is just purely market structure, but this is a high within that market structure. So we can't take the buy. We need a higher low, or we need this elbow. Like you need to buy at this next elbow, because if anything, this right here can be the elbow to do this, to create the new lower low. So you can't be buying at the high of the elbow. You need to be buying at the low. And again, it's the same exact principle as this. You're not buying at a support right now. Like you need to be buying at a support. You need to be buying at a support. This is like the most simple and most crucial rule. You need to buy at a support. You need to sell at a resistance. I used to have all these sticky notes like everywhere in my computer, and it's so overlooked because you would jump into this trade and then you're just simping. You're just like something so simple slipping up, which is buy at a support. Right now, you're not buying at a support. You could be buying on the bigger time frame on the support. Let's say you're buying this trade off of the daily. You're good. You're gonna take your trade here, put your stop loss under. It's not a bad trade. Let's say you put your take profit here. It's not a bad trade, but why not be a little bit more patient, and then you can get something where the trade would make a lot more sense, right? So it's just buy at a support, sell at a resistance. It's something, I'm telling you, probably the most crucial and important thing, and it is so looked over, right? At the beginning, the most important thing was the time frames in sync. Now you're seeing how you don't need the time frames in sync to take the trade. The most important thing to take the trade is support or resistance, right? So let's keep it going. So this is kind of what we're waiting right now for GBP JPY. This is, I'm telling you, very interesting. That wick will come. All right, so it's just like a little note to myself. Like I haven't looked at the markets. Just like I get here to do everything live with you guys, right? So AUDCHF. So we're waiting for it to get to our areas of interest. Yeah, that's literally it. It hasn't gotten there, so we simply don't do nothing until price doesn't get there. Once it gets there, then we'll reanalyze it. technically here, right here, we would be waiting for rejection of area of interest. So as of right now, we don't have that. We move on. Gold, same exact thing. Waiting for rejection of area of interest. As you can see, we have our area of interest 1, area of interest 2, nothing. Euro JPY, same exact thing, waiting for a rejection of our area of interest. This is gonna do. This doesn't look that clean. And then this is good. As you can see, it's slowing down, right? But as you can see, whenever we create a higher high, we usually just stop, consolidate for a little bit, and then we create the higher low, have the push, stop, consolidate, have the push. So as you can tell, we've stopped. So this is a good sign that now we're gonna slow down and have the higher low, right? You guys are seeing how you're seeing like the patterns again and again and again. Now, can this from here do this? 100%, right? This is why we don't take the counter trend trade. Like 100% this can do this. And I can show you plenty of examples of it doing it. For example, right here, as you can see, we had the lower low, lower high, lower low. We are now bullish, higher high. Then we have a slowdown, but boom, it kept going. It did create the higher low after that. But to my point is that you don't want to get that counter trend trade just because there's a rejection candle. Is it a possibility of it coming down now? Yes, but you do not want to go against that trend. As you can see, it's obviously a pattern. Whenever we're reaching a high point, there's a slowdown candle. When we're reaching a high point, there's a slowdown candle before the retracement, so on and so forth. As you can see, it's literally everywhere, but you don't want to go against it because you don't know where you are within that move. Let me see. There's another example of like a fake out. Let me see. I mean, this is a perfect example. Look, this is another perfect example. As you can see, we did low, lower high, lower low. We had a higher high. Breaking above this, ideally what it was supposed to do now is have a higher low after this rejection candle, and then boom, we just kept going. This is why we don't take the counter trend trade. That's why we have to wait for the higher low at this point to take a long. So we go down to the 4 hour. Wow, what a coincidence. The 4 hour has now done a beautiful, perfect double top. So now what a confirmation we can get is the moment it breaks under that double top neckline, we'll have the retest, and now we'll start heading its way to here. We're here, then we will wait for the shift to go bullish, and then we take the trade long. You guys are seeing how it's, making a lot more sense now. Like we're literally telling the market exactly what to do in order to make sense, right? What do you guys think so far? My EMA is fire, awesome. My EMA is the 50. It is close, offset 0. It's coming together. Yeah, it's like we're painting a picture. It's like we're building a car, or I don't know. My analogies could go so far. It's EMA, visibility on all time frames. So yeah. And the EMA we'll get into Wednesday. It's because it goes into with area of interest, support and resistance, same thing. Okay, cool, coming together, awesome. All right, so based off of this now, right, because we just came back to the market, we're like, all right, what looks cleaner now? NZD JPY or GJ? Which one looks cleaner to take a trade? 1 or 2? Okay, so GJ obviously looks cleaner because we are above the support. NZD JPY, we are under. This can literally create this wick right here and boom, catapult down as it's done in the past. You see, whenever we are under, we're selling. So this is not a good sign. If we're buying, we do not want to be under the support. We obviously want to be above, right? So now, which one looks closer to taking the trade? AUDCHF or NZD-JPY? So it's a little tricky. Take your time, take your time, take your time. I'm obviously going to explain to you guys, right? All right, Ronnie got it. All right, all right. I see a lot of you guys making a couple comments. Okay, I mean, I understand why you guys are saying that, right? So we're getting a mix of both, right? So let me explain to you. This right now hasn't gotten to our area of interest. Once it gets to our area of interest, we don't know if it's going to do the same exact thing as NZ. First of all, we don't even know if it's going to get there. Like this from right here can just decide to drop, right? So that's first things first. We don't even know if it's going to pull up to this spot. But when it pulls up, we don't know if it's going to reject immediately or break above and then go to this next area of interest. So there's three different variables. So once we pull up here, one, we don't know if we're going to pull up. That's first thing. Two, we don't know if we're going to pull up and then reject. And three, we don't know if we're going to pull up and close above and go to the next point, right? For this one, we just have one variable to take this trade. We just need a body closure above. It's confirming that it's rejecting it, and that's it. Because if we don't break above, we just don't take the trade. Like we already got to the area of interest. You get me? So all we need here to take this trade is, let's just quote unquote, one confluence. All we need to do is a break above, confirm it rejects, and then we take the trade. And this one, we need for it to get to the area of interest and then confirm that we reject it. You know what I mean? Like it's two big things that need to happen. So this one would technically still be above this one. You guys are seeing how that's making sense? Like we would categorize this based off of which one is at the area of interest first. As you can tell, we're not there yet. So here we're one candlestick ahead of this one. You guys are seeing it? You're seeing how this one's already there and how it's already ahead of it. So daily or weekly area of interest, whichever ones you mark up. So obviously this is first area of interest right here. So whichever one's the first area of interest. Like this one is not even at the first area of interest yet. This one's already there. So this one's already ahead of it because of that alone. Is that clear? Does that make sense? So first one, we have it's reached area of interest and then it's rejected it. So we have two things on the first one. The second one, we've reached area of interest. We have not rejected it yet. And then on the third one, we haven't even reached area of interest. You're seeing how we're categorizing it now based off of where we are, right? So now all of this is just to understand where we are in the markets. You're seeing how it's all like coming together. Like it's going to get more clear, right? So where would you categorize this one and then two? One and then two. Would you leave them the same or move them around? Okay, awesome. Awesome. They're exactly the same. They're both on the way to the area of interest. So they look literally identical. They literally look identical, right? So Euro JPY or gold, which one would you leave? Would you move them around, leave them the same? How would you do it? So this is Euro JPY, and then this is gold. Okay, fire. Leave it like that. Okay. Reason is because gold is literally like nothing away from its first area of interest to then sell. Euro JPY, we got some time before we come to our first area of interest. Like we got some time. You get me? So this can notice this right here is 6-7 days. Can take 5-6 days more to get here versus this can literally just get here in a couple hours. So this is 5-6 days ahead of this one. Same exact thing for Euro GBP. So basically the only thing that changed were the first two, GJ rejected and ZDJPY didn't reject. So these were only two that kind of changed, right? So this is just like a little update to the markets and how we are right now. So going into areas of interest and how do you properly mark off the zones, right? So let's go on with this example with gold, right? So let's start again. So we remember from yesterday that we were marking off areas of interest on the weekly based off of whatever had the most taps, so on and so forth, right? So we wanna, when we do this, we're just going to throw the line to wherever it has the most taps, right? So it technically could have been here, could have been here, could have been to a lot of places, right? But we need to also like be realistic. I personally like same way how I mark up my structure levels. I do it to the body. So I want to put this to a body of something. So I'm going to put it to this body here. As you can see, it respects this body, these wicks through here. And then if we look left, it respects these bodies and then this body and then this body, right? Then we go over to the line chart. You can see in the line chart, it respects it perfectly. Again, we don't use the line chart just for the example. But I want to mark it off to the bodies. Once you mark it off, you could kind of tweak it a little bit, but this is where we'll go down to the daily time frame or whatever other time frame you have. And then you kind of adjust it a little bit more based off of the daily bodies. How much closer are we to the daily bodies? As you can see, we're kind of like right on the money of the perfect area. This is where you'll get the line, maybe move it down a little bit, kind of adjust it to wherever it gets the most taps, right? So anywhere like that where it has the most sense. As you can see here, you get these bodies, so on and so forth, which looks good. Same exact thing with the other area of interest. So this area of interest, if we were to mark it off to these bodies right here, which would be this body, as you can see, we cut off this one and then this one, versus we come here, we get one body, two body, and if we look left, we get no bodies. So this area obviously looks better. This is when we'll go down to the daily. If it's the same area, it's not the same area. So we can't adjust it based off of daily. We only adjusted this one because they both have the same area of interest. You guys understand that, right? Like we adjusted this one to the daily bodies because area of interest one is on both weekly and the daily. That's the only reason why. Because this one we adjust on the weekly bodies, and then we can't move it now on the daily bodies because it's not the same area of interest, right? So same thing would happen here on the daily area of interest. We would put it on the bodies wherever it makes the most sense. You don't want to put it at the bottom of the wick or anything like this or whatever. You'd want to put it in the bodies. So when we have an area of interest like this, that we kind of have a juicy spot, which would be weekly area of interest 2 like this, and then daily area of interest 2 like this. This is where you'll see kind of my zones. You'll kind of see my boxes like this. So this is where I literally get a box, put it at the top of this weekly area of interest, and then I'll put it at the bottom at this weekly area of interest, and then boom, boom. Look how much cleaner my chart looks because I already know this. So I don't have to look left, look at these lines. I already marked it up. So I just throw the zone and that's it. So now this is where these like areas come out of, like they're not just like drawn out of the blue, right? Like that's kind of what it seems, but it's just looks a lot cleaner this way and it confuses people, right? So again, whenever you have a zone like this, you just put the box and you already know what they are. So now you're not looking for price to come in and then retest this one specifically or this one specifically. Like you are just targeting this zone. Once price comes into this box area, then it gives you your psychology. Then you take your strategy. Then you take the trade short and that's it. You're not looking for it to tap that specific line, right? Because that can just throw people off completely. This guy said my brain needs surgery. You guys are clowns, bro. So once it comes into this zone, this is where you're looking for the sell. You're not looking for the sell exactly at 160, 1684, whatever. Like you're looking for this kind of zone like this, right? So isn't that what GJ has already done? Yeah. So if we go over to GJ, as you can see, I have over the area of interest that we marked off, and then I'll put this box at the body. So now we're looking for it to target anywhere within this level. Let me show you another zone that we have here currently. Let me show you another example, right? So it kind of makes sense. So we already know that. Let's look for one that has multiple different areas of interest. Damn, I don't think we have any. So everything is kind of like within the same spot, but let me show you an example, right? So let's say, for example, right now, this would be round psychological 8,500 that we're looking for the weekly to come back and retest. But as you can see, if we get this box, our trusty box, and then we throw it across and we touch the bodies, like we squeeze in all these bodies in that zone. Once we go down to the daily, it doesn't look that bad at all. It looks like, all right, shit, now we're rejecting our daily EMA, so on and so forth. You get what I mean? Like it makes everything so much cleaner, and mess around this trade now is valid because we're not waiting for such a specific break above and then retest of that exact line, right? Like that's something that, yes, it's better for your trading, but it makes more sense to just drop a zone, right? If you notice right here, same exact thing. We're in the zone, we wait for the breakout, then the retest of the zone, and then we're gone, right? So it's just like a zone you want to make it work. Let me show you one on, for example, AUD CHF. As you can see here, we have this area of interest on the weekly time frame, bodies throughout here, whatever. We'll go down to the daily time frame, and then we can kind of squeeze in, let's say, this body through here. So we'll get these weekly bodies, and then we can throw this all the way to that right there. So we don't have to have this line. So now we have a little bit of a margin of both. So now we take this off, and then boom. You guys just seeing how that kind of goes into play. Looks a lot cleaner, gives it a lot more breathing room, right? But now there's another side to it, right? So this is where I'm gonna go into like round psychological and all these points we were like so confused about. So round psychological, well, before I get into that, this is very simple, right? Like doesn't really have any science behind it. It's just once you get your lines, you just mark off a small zone. Like you don't want to do anything like this big, like this is huge, right? This would be too big of a area of interest. You could fit a whole daily candle in there, right? You want to do something small, something where it's like realistic and it kind of, you know, has a touching of everything, right? Does that make sense? Is it clear? I could go into more examples. Let's do that. Let's go into more examples, right? So we understand gold. We already know what that line is for. So let's say Euro JPY, weekly time frame. This would be our first area of interest right here. We'll look left. If you want to grab some of these weekly bodies from right here, as you can see, we'll get the bodies from above here, and then we'll do it right into this horizontal line, which we did that one. And then when we go down to the daily, we can adjust it a little bit. So we can move it from this area that it is right now. Where'd it go, this box? You see, we can move it from exactly there to these bodies right here. You see, now we got these bodies, and these. So now we can have, I just don't see it. Holy shit. Oh, it's over here. There it is. Now we have a little zone where price can come in and then retest this area and then go. You guys are seeing the difference that you kind of go in between the weekly and the daily, and then you make it look comfy. You know, you don't make it look too precise, too exact. You know, the odds of price coming into those areas aren't realistic, right? Like you want to make something that makes sense. What do you mean by grabbing the body? So you want to put the top of the zone at some bodies. So let's say, for example, this right here, you want to put it at the top of the bodies, and then you want to put the bottom of the zone at other bodies. So you see it's these bodies right here. Again, if you get a little confused, if you want, throw on the line chart. As you can see, it's all of these elbows. The bodies are also known as elbows, right? So it's pretty much it. Like, does that make sense? Does it? It's very clear, like the way you mark off these zones. So let's say we go now to Euro GBP. This wick, as you can tell, let's grab these bodies from up here. So we're gonna grab this body, we're gonna drag it to the left, to the right. Once we go down to the daily, as you can see, there's not much on the daily. So we can probably bring it all the way down to these daily bodies right here. See, we're touching this daily body, these daily bodies here. This is where we'll fine tune and adjust it where it has the most taps and it's not like too crazy big. So now we're not reaching to only tap into this resistance and then go. Now we could come into this zone. we can literally wick into this area, literally wick, and then boom, we head to the upside, which is what we do the majority of the time. As you can see, we wick into all these zones, and this is where we can look for the buys, right? We usually throw the alarm in between those levels. So we're kind of like getting the trade right in the middle. Is it making sense now? It's a little bit more clear. Let me take all these lines off. They're tripping me out. This is just for the zones. Yeah, just for the zones. Just for the zones. If both the weekly and area of interest lines are close to each other, that's where you make the box to connect them. Yes. Starting to realize how crucial a clean chart is. Yes, like this is why a clean chart is essential and will make or break your trading. Like if you don't have your charts how I have mine right now, it's a wrap. Like it's like the markets, you're just not going to see the markets. Like you got to have them clean. I literally try to have 2 lines max on my charts. I'm doing some chart hygiene now. I don't ever delete my lines. I just basically make them white. So whenever price comes back into those areas, I already know. Like if I go to GJ, like I have GJ marked up forever. Like I don't ever have to mark it up ever again. If you see all these lines here, I just don't have them marked up. You can kind of see them here to the right. But whenever GJ comes into these areas, I already have these zones marked off because I've already traded through this history before. I know it's respected. So there's no point in deleting it. I leave the lines. So when price comes into this area, let's say this line, I'll make it black. So now I'll come into here and then I'll mark off my zone. So now I know this is the zone, but I'm leaving the line because it's my foundation. So I already did the work, right? There's no need to do double work. So I'll just make it clear again so you can't even see it. Like you literally can't see it unless I point it out. We were on Euro GBP. So you guys are seeing it now. Is it making sense? Is it more clear? So for this example, this right here, we're gonna just mark it off as a box, literally like this. And that's it. We don't need it anymore. We don't need this line. It's like, it's so unnecessary. We know this is the area. We're waiting for it to come back and then retest. Simple. But for you guys, until the end of the bootcamp, please leave this line on just so. How big is too big? I don't know. Like it's the same thing as an elbow. Like, you guys just got to determine whatever it makes more sense for you. You get me? So if the zone looks too big, you just fucking make it smaller. I don't know. It just got to make sense. I think this guy's fucking. All right. So round psychological level, right? So round psychological level are pretty trippy. It's really not necessary. I swear to God, it's really not necessary. So I just do it because it looks cool, and sometimes it is a very valid point. So right, so let's say we already deleted this. We know this is our zone. What I'll do is, right, don't go like this is very, very simple. It's added. This is not like make or break a trade. This is just an added confidence. So I show you guys how I find it. So once you have your zones, I'll literally get my I'll get array, this one right here, and I'll throw it in between the box. And then once I throw it in between the box, I won't even look at it. I'll literally just double click it, go to coordinates, what looks the best. Oh shit, I delete these two, boom. Now we have a round psychological level. So now we're retesting area of interest on the weekly because we already know it. We're retesting our box, and at the same time, we have a round psychological level within this zone at the same time. But these levels are found after you already marked off your area of interest. Notice all of the things we've done in order to get this area of interest. So let me show you another example. Let's say we go over to gold, right? So this is our zone. Remember how we had here weekly area of interest and then daily? You guys remember those two, right? How we made it into the zone in gold? You guys remember this? Okay, so then this is where we will get our ray, and then we will just drop it in here, literally in the middle of the box. Like I didn't even look. You'll double click it, and then you'll be like, what's close? Oh shit, what's close? Let's just move it down so it's easier. I mean, move it up, whatever. Wow, we have round psychological. Let me delete this. Round psychological, 170,000. Boom. In between our zone. So now when we come and retest our area of interest, we're now retesting weekly area of interest, daily area of interest, round psychological level at this zone. You guys are seeing that, right? You guys are seeing how simple it is. After we find the zone, we find this area of interest. That's wild. Simple. It's very, 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 very simple. I can literally do it anywhere. Let's say this is my area of interest in between here. I'll literally get array. So let's just get array, drop it in the middle. What do we have? 7049, boom, 500. Or we want to make it 7950, boom, there you go, 1750, right in the middle, but in between the zone that I have marked off. It's very simple. It's literally just added. It doesn't define the trade. And not when you look left, not only are we rejecting the zone, but we're rejecting the round psychological level. And it does help. It's like the EMA. It's an added confidence. It builds up your confidences to take in the trade. So round psych is the center of the zone. No, it's never the center of the zone. You just drop it in the zone and then wherever it is. So for example, let's say this one. This one, let's say, I don't even know why that zone is there, but whatever. So say we drop it in the zone. Now we'll see whatever makes sense. So let's say right here, I try to do it to every 500. So as you can see here, we have 500. In this case, it's at the top of the zone. Or let's see if we can find something lower in the middle. Yeah, look, the cleanest one is 500. So I try to make it 500 or 600, just strictly round. So let's say for this one, this would have been the case. Say 500. If not, it would have had to have been 7, which is the extra 50. So it's every 500. Let's say now NZD JPY. For this case, we would have done the same thing. Drop the line in the middle. We already know the round psychological is 500. And then on GJ, this would have been the zone. The round psychological would have popped up as 163. Right, let's go to a random chart. I don't know, say one of these random pairs anyway. So I can show you guys how it works. All right, NZD USD was the first one that I saw. This is our random area of interest. We'll get our array, throw it in the middle, double tap it. What do we have? Do we have round psychological 6200? Like it's literally that simple. And then here, if you want, you do a literally 2 pip adjustment. Now it looks an added confluence. Very simple. But after we've identified where we want to buy or sell, like after we've put the zone is where we drop through this is why I told you guys, like it's steps to everything. Like everything is just like a sequence. So let me do another example. Let's do, I don't know, GBP, whatever. As you can see, this zone, the bottom is round psychological 120-100. Simple. There's really like not much more to it. That's just really it. What do you guys think? Easy, simple? It's funny how simple. I mean, it's simple now because I've learned how to explain it. But imagine trying to explain it without knowing how to explain it. Like, how do you explain that without knowing, you know? So like this alone took me like 2 days in the first boot camp. Do you use the quarter level theory? Not really, bro. I don't even understand what that is, honestly. I don't even like why. Like, what the hell is that? It's just support and resistance, you know? Yeah, I definitely got better from the last bootcamp for sure. So yeah, I try the psychologicals to be every 500. If you find success at every 250, by all means, but I personally do every 500. What's the longest I've held a trade? The longest I've ever held a trade is AUD JPY. I still have it on the chart because I could have still been holding this shit, but it was this one. It was 18%, but I could have literally held it for like more. Or imagine I would have still been holding this. Probably like the swap would have like completely blown my account. But imagine like this would have been insane. 100%. No, but the most I've ever held was here. It was 18%. Very simple trade. It was literally just break and retest. It's literally all it was. No, of course. Swap is like whenever you hold a trade overnight and through the weekend. So look, so we have Julio from the previous bootcamp. He says he's getting everything a lot more on this one now. Yeah, so like if I were to ever do another bootcamp again, you guys are part of it. So you guys just, you guys continue learning, continue hopping on. So yeah, it's super clutch. Yeah, you guys, yeah, just everybody keeps growing. Yeah. So when it comes to so are we good so far? Let's go to GJ, right? Are we good so far on identifying whether the markets are bullish or bearish, right? We understand market structure. We understand the elbows, where the elbows are. We understand how to mark off a lower high and a lower low. We're all good with that, right? We understand that? All right, cool. We'll get into that shortly, yeah. All right, perfect. So we understand where the market is on each time frame. We understand if the market is at a top or if it is at a area of interest or if it's on the way, right? Like we know in the market whether we are here or here or here. We understand it now, right? We understand the majority of the markets are somewhere in here or here, and we have to wait for it here. And the only way we can wait for it here is on the weekly or daily time frame once we get to this area. We understand that everything is clear. So I just want to make sure, because I want to go at your guys' pace, right? All right, so appreciate it, Elijah, honestly. So we understand this, we understand area of interest. Now we understand round psychological, right? It's really not that hard. Like it's probably the easiest thing, honestly. Awesome, Jeremy. So we understand this, we understand weekly and daily area of interest. We understand how to mark it up. We understand how to literally just put the lines on whatever that makes the most sense. So let's do a little quick recap on that, because I feel like yeah, I need some more practice on the area of interest. All right, perfect. So let's just do a little recap again, right? Because I can see when I give you guys the homework, I can see some mistakes. It's normal. It's very normal, right? Because it's your first time doing it. Like there's literally no right or wrong answer, right? So let's say right now we're at a higher high, and then this is the daily time frame. So we understand that now is the daily bullish or bearish. Okay. 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 Okay, fire. So the daily is bullish. So we mark this as our, we mark this as our higher high. And then where would our higher low be? Would our higher low be at 0.1 or 2? Okay, perfect. So it would be at 0.2. So we have a higher low here. So now we understand that we would get a box in between here, because anything in between this, now we are just market structure. We would get our box and then we simply throw it left. And now we're looking for areas of interest in between this box. So we're looking to throw maybe 1, 2, max 3 lines in here. We don't need any more than those lines in these areas. So we know the first thing is that price is going to start heading its way back. So once we start heading its way back, we need to find the first area where price can touch and then go to the upside, right? So this is where we'll get our horizontal line, and then we'll just start dragging it down and seeing where it has the most touches, right? So just for this example, we're just going to do this minor adjustment just so it looks good, you know. All right, so let's just do this, which it almost played out perfectly, but as you can tell, this would be the first area where price can have a minor retracement and then rejects to the upside. As you can tell, whenever we are above it, we're buying. Whenever we are under, we're selling. Whenever we're under, we're selling. Whenever we're above, we're buying, so on and so forth. You guys understand that, right? And now the fact that whenever we're above, we're buying, we can do the exact same thing here. We can retest it and then head to the upside. You guys are with me so far? It's very clear. Okay. Okay. Perfect. Okay. So this is what we'll mark off as area of interest number 1. Because this is where we will wait for price. This is where we'll put our alarm at this area. We'll put an alarm here. And then once price reaches this area is then where we will take the trade, right? Zoom in a little bit more. Let me delete this alarm. All right, cool. So now this is where we'll go and find another area of interest, because the possibility of price breaking through here and then going to somewhere else is very likely, because we're still within this bullish box. So this is where we will draw our horizontal line again, and then we'll drag it from this point down, and we will find the next point where we can be used as support and resistance. And again, just for this example, I'm just going to do this minor adjustment just so it obviously makes sense. I'm not that good at drawing these. So this could be another area of interest that price can come into and then reject from, due to the fact that it is used as resistance, used as support, resistance, support, support, support. And if price comes back into here, there's a high possibility that we can use it as support again to head to the upside. So we would mark this off as area of interest number 2. You guys are with me so far? It's all making sense? So the first direction on 3 time frames, second area of interest. Correct. Yes. Yes. So when you're going to type of your confluences here, you'll put confluences to go long. And I was literally about to just recap on that right now, right? Confluences to go long. You put 1 weekly bullish, whatever. 2 daily bearish, whatever. I mean, you don't put a 2, you just put daily bearish, 4-hour bullish, right? So then 2 would be your area of interest. So you guys are with me so far? It's all making sense. So let me just recap it again where it's going to make sense right now, right? So let's take all of this off. Take all this off. All right, cool. So just to have a recap, after you identify top-down analysis, right? So first things first is this we need to understand where the market is. Are we at a high? Are we at a low? Or are we in an area that we're looking to buy? So after you understand whether we're bullish or bearish, it is mandatory, like this is a must. After you know whether the 4 hours bullish, it is a mandatory to come back and reset from the top. Same exact thing you just did to see if the weekly was bullish or bearish. Now you're going to reset and see where are we on the weekly area of interest. Are we at a support or a resistance? It is a mandatory reset, because there is no reason for you to look for areas of interest here, because then here you would have been like, whoa, this would have been actually a good 4-hour support level to buy, or this is a good resistance level to buy, or whatever. Because you're on the 4-hour, you can get distracted. So after you identify the market structure on all time frames, you mandatory need to reset to the weekly time frame. So this is where we'll type up here. I did this on, I think, bootcamp 3, right? So we would put mandatory identify market structure, whether we are bullish or bearish. Markup. Are we 1, 2, or 3? We all know what 1, 2, or 3 means, right? So let's just do a little side note in here. It's in the last recording. So 1 is top, 2 is on the way to area of interest, 3 is at area of interest, right? So this is mandatory to do 1. Well, this is first. Bullish or bearish. Can we do this? Number 2. So it would be a mandatory reset to weekly time frame to mark up whether we are area of interest 1, 2, or 3. You guys are seeing it right now? Or let's delete this 10% for now. Right? You guys are with me? Is it making sense? Take a screenshot of this, put it in a sticky note. Do whatever you have to do, because this is just going to help you guys, right? So you need to first understand whether we are bullish or bearish. This is number one. After number one, then would come number two, where then you would see whether we are a mandatory retest to the weekly time frame and see whether we are at the top, on the way, or at the area of interest. So this is mandatory, like you have to come back. For sure. Patience is mandatory part of the strategy. Oh, 100%. I mean, patience is just mandatory with like everything, like just life. Like same day you just get your gym membership, you're not gonna have abs, you know? Like it's, you gotta be patient, you gotta put in the work. It's the same thing here. There's literally no difference. Just people could get sidetracked because the possibility is there. Yes, like you can really come into this shit, click a couple buttons and make a shit ton of money, but that doesn't mean that it's the right thing to do. So you could, start the gym, do roids, and yeah, you could be pretty big on like, 2-3 weeks, but it's not the right thing to do. Like you're not going to live like, the healthiest life if you don't keep up with your diet or whatever. It's the same thing with here. Like you can come in and you could, go crazy with it, but you're probably not going to have the longest account that's going to live the longest if you don't have the right risk management or right strategy. It's the same thing. So it's just what side do you want to be on, right? I'm just slow and steady. I don't really want like those fast, crazy results because they can leave fast and crazy pretty too, right? So this right here would be mandatory higher time frames and mandatory reset, all of these things. So for example, would you take a trade at a 4-hour level, but have a short to take profit, or not take the trade at all? So, I mean, this is just more kind of like the drifting, right? So that'd be more like me drifting. Like you guys are going to know how to do this exactly right here. But instead of with these 3 time frames, you'll learn how to do it with these 3 time frames. So then you could take the day trades. But the strategy, I just want to show you where it's clean, where it's easier to keep up with, where this is a strategy you can apply it on anything. You can do it on these 3 time frames, which is the same thing, but it's just shorter trades, quicker moves, less probability of like you have a less win rate. And this way you have more of a win rate because higher time frame respects areas more. Like it's very, very, very common that price rejects previous structure. You go to like 30-minute, like structure's not being retested. Like there's just so much more noise that all the, like, for example, like, how long it takes for an elbow to be created on the daily? Like you best believe we're going to come back and then create it on the daily again. On the 15-30 minute, you're getting elbows every 30 minutes. So they're not really being respected. So you could take it, but just the risk is obviously a lot higher. You'll be more active, but it's up to your risk tolerance, right? I personally like this and a mix of the day trading, but this is the foundation. Once you get this foundation, you can apply it anywhere. This is fire. So never an entry until, so yeah, I don't enter a trade until we're not at a weekly or daily area of interest. Again, if you go out to the weekly area of interest and you don't see nothing, this is where you'll go down to the daily area of interest and then see what's going on there, right? In this case, there's not a really clean area of interest. It's there because I could see it because of my experience. But then if there's nothing, then we go down to the next time frame and then identify an area of interest there. So this is where, let's just do this. Let's clean it up. So we're clear here. So let's delete this. So this is where we'll put after identifying area of interest and where. So this is where we go mandatory. Identify area of interest and where we are on the weekly. We do the same on the daily. Find area of interest and where are we? 1, 2, or 3. And let's just copy and paste this. You guys are seeing it now. You guys are seeing how it's making more sense, how it's all like steps. This is what I told you guys that exactly correct. Yep. What do you mean with the retest of the weekly time frame? What do you mean retest? To reset. Like you reset. So after doing a top-down analysis, you now go back to the weekly and you look for a weekly area of interest. Yep. All right, so let's cut this in half. This is way too long. Yeah, having consistent steps was my biggest problem. And I definitely understand it because like when you go to school and you go to college, like they give you like a study guide, you know, they give you like a chapter, like, all right, today we're going to read chapters, whatever, 5 through 7. And then they're going to do a test on chapters 5 through 7. So you know to study whatever's in there and then you do the test on that. Here, nobody's going to give you the chapter. Nobody's going to give you the steps in order to the test, right? So I'm giving you guys the exact structure. Like this is exactly what you need in order to succeed in the test. And this is what you just refer back to. So nobody gives you this and nobody's going to give you it because nobody really knows how to like do it, or I've never seen anybody do it. So after you identify weekly area of interest, then you mandatory now go to the daily and you do the same thing. You identify an area of interest, whether we're bullish or bearish. Is everything clear as of right now? Is everything making sense? So for this week's homework, so let's do this. All I want you guys to do is do this. I want you guys to find me a pair that doesn't matter. It really doesn't matter. I want you guys to just pick a pair, go into your groups and pick a pair. Obviously, the closer we are to entry would be more interesting, but I want you guys to give me a variety of pairs. I want you guys to give me a pair that is not at the area of interest or whatever. I want you guys to bring me a pair that is at the bottom, on our way, and then the 4 hours just doing its thing. You know what I mean? Like this way, it shows me you guys really understand it. Like if you guys can have 2-3 pairs, that would be awesome. Just it's fast, right? Like you guys can literally just do that, like the full analysis quick. I want you guys to have a pair, identify whether we're bullish or bearish, where we are. Are we at, in this case, we would put 3. Here we would put 3, right? For the 4 hour, we don't put anything as of right now. So you guys understand this, right? You guys understand the one? Or is it that I explain it too fast? You can drop a comment. We're good, clean. So the homework, you guys do it in your groups, and then I pick one person out of the group to present it on our next class. So first things first, find me a pair that is bullish or bearish. After identifying whether a pair is bullish or bearish, you're then going to reset to the higher time frame and then see where we are on the week. Are we at a top? Are we on the way? Or are we at the area of interest? And then after you identify that is where you'll go down to the daily. And then in the daily, you'll tell me whether we are 1, 2, or 3. Just literally just follow these steps right here, 1 and 2. And then you just mark them up. You guys can literally just get this exact same thing, copy, paste it. And then here you will edit whether this is bullish or bearish, whether it's 1, 2, or 3, bullish or bearish, 1, 2, or 3, whether we're here or not, or whether, you know, it's very self-explanatory. Is it clear? Is it a little confusing? Very clear. Got it. Go into my group right now. Very simple. Obviously, just, you know, don't do the pairs that are in here. Any pairs that are out of here, every other pairs would make the most sense. Again, it doesn't have to be a pair that is ready like GJ, right? There, get another pair that is not ready. For example, let's say NZD, let's say this one, Euro GBP. You would come in, you would identify, we are weekly is bullish, daily is bullish, 4 hour is still bullish, and then we would reset back to the weekly time frame. And then on the reset, on the weekly, we are at a top, meaning we are at 3. on the daily, we would go back down. After we identified where we are on the daily, as you can see, we're not at an area of interest. We're obviously at the top. So we would now go down to the daily, mandatory. I mean, yeah, my bad. Yeah, appreciate you, man. Yeah, the top is 1. Yep, yep, top is 1. Top is 1. It's a lot, you know, it's a lot. So then the top is 1 here as well. And then that's it. Very simple. This is literally all you guys got to do. This. And then right here for 2 would be waiting for retest of area of interest. And then you just mark off your area of interest, whatever it is, whether this your area of interest or whatever. And then get as creative as you can. Throw your area of interest. I mean, throw your round psychological, do everything, right? Everything that was just explained as of right now. What if the pair that we find adjust from on the way to area of interest we present, we just explained. No, and if it changes from when you guys analyze it to when you guys are presenting, adjust it live. Show me how it got adjusted, you know? The markets move, so there's no way how like it's gonna stay the same. I totally understand that. So if it needs to get adjusted, it gets adjusted while you guys are presenting. So everything makes sense as of right now. Everything makes sense from this to area of interest around psychological. Everything is looking a lot more clear. Let me